All right, today is, what is today? Wednesday, December 23rd, and this is the end of the day review. Now we're going to be talking about a few days here. We have not done an update for a few days. We're going to talk about the 16th, or sorry, the 17th, which was Thursday of last week. And we're going to be talking about the 18th. I'm just scrolling back to allow those of you who like to take a snapshot of the trades. And then we're going to be talking about Monday and Tuesday of this week also. And then today. All right, so if we look at the daily summary and we go back to Thursday of last week, our 9:30 to noon category, we did 3 points. 3 points, those of you who might just be getting familiar with us, we're trading the NASDAQ 100 futures, we're trading the adaptive entry system, and this is the 9:30 to noon Eastern time category where we take all 4 of the adaptive entry system signals. 3 points, it's $20 a point per contract, and we did 8 trades on that day. And on Friday, we did 40 3/4 points, pretty decent day. We did 11 trades. On Monday, we did 20 points at $20 a point, 9 trades. Yesterday was a bit of a challenge, which is not at all unusual. We've been talking about this a little bit in our live trading room today, that you get into the 2 or 3 days ahead of a holiday week, market holiday. We've got a day and a half of market holiday this week, and a lot of the institutional traders start to step away, and the volume and volatility can be significantly lower. So we hit that yesterday. So down 63.5 points yesterday at $20 a point. So that's a fairly sizable loss, but it's not our biggest losing day. And again, I think it's pretty manageable. And you'll see what I'm talking about when we take a look at the personal trading plan. And then today, we're calling it an early day today simply for the same reasons that I just described. We're seeing not a lot of follow through today, not a lot of volatility. Volume is way down today. And so just from a practical standpoint, it makes sense to just step away. And again, 39.25 points at $20 a point is manageable, as you'll see when we pull up the personal trading plan. Now, there are 2 categories that we track and trade within, and we display both of them because we want to help traders understand that there are many, many different ways that you can trade and accommodate your own personal lifestyle and your personal desires. We show 9:30 to noon, which is a fairly limited amount of trading time, tracking all signals. We also display 7 a.m. to 4 p.m. Eastern, trading only the trend bias and continuation signals. So those are all the signals that really are aligned with the overall trend of the market. And that gives you a different perspective where you're not taking all of the signals, so there's fewer signals to take, and you have a longer time frame that you're trading. So they both present very different performance levels. We also, although we don't plug it into a personal trading plan, we do keep track of 7 to 4 all signals. So it's the same time frame, but tracking all 4 of the signals. And that was down 13.5 points today. So these are the 2 that I'm going to focus on as we pull up the personal trading plan. So for today, 39.25, and we did 9 trades, and then 11.25 loss, and we did 7 trades under the trend bias category. So now what we're going to do is pull up the personal trading plan. And I'm on the 9:30 to noon category. I'm going to just plug in our performance here. 39.25 times $20 a point, and we're trading 3 contracts. So today is a negative 23.55, and we did, sorry, I have to jump back there. We did 9 trades. We did 9 trades, so 3 contracts per trade is 27 contracts. Now I'm going to jump over to our other category here, the 7 to 4 category, where we were down 11.25 points today. 11.25 times $20 a point times 3 contracts equals a loss of $675 today, and we did 7 trades at 3 contracts per trade. It's 21 contracts that we traded. So let's jump back to our 9:30 to noon category. Now I've already plugged in the other numbers. I did a catch up here, and I plugged in Thursday, Friday, Monday, and Tuesday with the corresponding number of contracts, and the same thing on our 7 to 4, Thursday, Friday, Monday, and Tuesday with the corresponding number of contracts. So let's jump over to our 9:30 to noon category. And what I want to evaluate is these 4 numbers right here, these 4 values. First of all, we have completed now 24.6 weeks. 24.6 weeks of our tracking in the personal trading plan. And 40 of those days, 40 days within the 24.6 weeks have been losing days, 40 days. That means by default, the other days are all winning days. So we keep track of what our losing days are as a percentage of our weekly we've already completed 24.6 weeks. Now, the 2 values that are really important to us are these 2 right here. This 23.2 is telling us that out of all of our winning trades, the winning trades are averaging 23.2 points a day, and it's $20 a point on the NASDAQ 100. 23.2 points a day is what we're averaging, and that number is not just a straight average, it actually takes into account the frequency rate of winning days to the number of weeks that we've already experienced. So it's a factor of all of the winning trades plus the number of winning trades over the 24.6 weeks. This value is the average of the losing trades per day, and also taking into account the frequency rate of 40 losing days for 24.6 weeks. So we know that this is our actual average. I think it's a fairly conservative average, actually. I think it's understated. And the reason I say that is because there's certain things that folks in our live trading room know that we do and we don't do. We will lock in 5 points, for example, and then wait for it to hit 10 points, but we don't take any other action to improve our lock to 6 or 7 or 8 points. There are frequently opportunities where we could adjust our stop, but it's all a basis of interpretation by individual traders, and so we let our stop go to 20 points of a loss unless there is a signal reversal or a fractal that we could adjust to. So there's a fairly conservative approach that we take to our tracking so that we don't overstate anything. At least that's our intention. So when I look at these values, it's telling me that if I continued to trade at this same run rate, I could have a reasonable idea of what my total profit, total income could be over a 12-month period. So what I'm going to do then is I'm going to take those values and plug them into our forecast values. So everything that has happened to date is shaded in blue and is based on these average values. Everything that happens from here on forward is going to be based on the forecast values. And I want the forecast values to be the same as what my actual run rate values have been. So I'm going to put in 23.2, and I'm going to put in a minus 41.61. So our average losing day has increased in value slightly since last Wednesday when we did this update. So now we have our go forward forecast values, run rate, set at the same value as our actual average run rate. And if we maintain no more than 3 contracts, which we're currently trading 3 contracts, then our income over the course of a 52-week period is projected to be $153,049. So that's a pretty reasonable income, and it's not going to be guaranteed that we'll make that amount of money. It will continually be influenced by these averages, these actual run rate averages. Now, the last couple of days, you can see that we got into a period here around the holiday weeks where we've had a couple of back-to-back losing days. Those I don't think are going to continue because we won't have the same holiday period influence, but we don't know that for sure. So what will happen going forward is these values will improve or erode. We will use whatever our actual run rate values are and use them for our forecast. And by doing so, then we always can keep our eye on what a reasonable projected income is. This may end up being higher, it may end up being lower. But regardless, we know basically on a daily basis where our income is projected to be, and we can adjust accordingly. So if you are confident in your run rate values and you know how you got there, you know why you got there, and you feel comfortable in your understanding of those values, then continue to trade the way you've been trading and maybe just slightly tweak and improve as you learn. One thing that I think is really important to point out here is this account started with $5,000. So for us to have a projected income over the course of 12 months, 52 weeks, of $153,049 is very, very strong, very strong. So 5,000 to 153,000 over the course of a year, I think that's pretty strong. If these run rate values erode to some degree, then we might see that number go down. But regardless, in my opinion, any way you look at it, we're on a very, very strong pace right now, even though we've taken a few additional losses in the last couple of days. But we're on a very, very strong pace for a strong income, having started with just $5,000. Now, one other thing I want to do here is I want to lock in the number of contracts on the days that we've already completed. These are the number of contracts that we traded. And the reason I do that is because if I was looking at this forecasted value of 153,000, and I'm feeling really confident with what I've done in terms of establishing a track record of winning days, losing days, and my averages, I might feel inclined to adjust my maximum number of contracts. So let's say I decided I wanted to, going forward, increase my maximum number of contracts from 3 to 5. By locking in the contract override field 3, it makes sure that if I change that value, it won't go back and change anything that we've already done. Those numbers and values are locked, but it will change the number going forward. So if I wanted to start trading next week, 5 contracts, then I could trade 5. And by changing my max from 3 to 5, I go from 153,000 potentially to potentially 210,000 just by simply changing the number of contracts. Or maybe I only want to add 1 contract more than the 3 that I've been trading. This variable is entirely up to you to manage, entirely up to you as an individual trading business owner to decide how you want to use that variable. But I'm going to leave it at 3. I think a projection of 153,000 over a 12-month period is pretty solid. So let's jump to our other category. I won't go into quite so much detail on this one because you get the idea. We've had 35 losing days in 24.6 weeks. Our average win is 31.46, and that factors in the ratio, the frequency rate of winning days to weeks. And our losing average day is 33.10, and that factors in the number of losing days, the frequency of losing days relative to the total number of weeks. So we're going to translate our actual run rates into our forecast values, 31.46 and minus 33.1. Sticking with 3 contracts, that projects a possible income over 12 months of $282,517. Now we are almost at 26 weeks. We are almost halfway through this 12-month plan. The further we are into the plan, the more likely it is that this value will not change significantly. I mean, significantly by, it's not going to go from 282 to 182, in the next week or so. It's just not going to happen unless you've completely mismanaged the management of your risk. So the further we get into our 12-month tracking, the more confidence I have in that value. Again, it will be influenced to a small degree by variations in our winning profit average or our losing day profit average. But the further we get into the plan, the less likely it is it's going to be significant. I can't guarantee that your income, if you followed every step of the way with us, is 282,517. But whatever it is, this is a value that becomes more and more closer to reality the further we get into the plan. It will be influenced by variations in these actual run rate values, which will be influenced by going forward, the frequency of winning days to losing days, and also the strength of winning days and losing days. Again, this account also started with $5,000. So to go from $5,000 to $282,517 as our kind of mid-year forecast is a pretty solid forecast in my opinion. Again, I'm going to lock in under the contract override column 3 contracts on each of the days that we've completed. And I'm going to come back up here and show you that if you wanted to influence your outcome here, maybe you want to be more conservative and you want to drop down to 2 contracts, and you see that you could still potentially have a $230,000 income. Maybe you want to jump up to 5 contracts, and all of a sudden, that potential income could be as much as $385,000. I'm going to leave ours at 3. I think that that's a very reasonable number of contracts to be trading. Okay, I'm going to jump back over to our tracking and pull up the averages tab. The averages are something I also like to conclude my day with, looking at where we are in terms of averages. There's 3 primary categories I look at, the 2 categories that we're tracking on our personal trading plan, and then the other category I mentioned, which is 7 to 4 all signals. That 7 to 4 all signals, if you wanted to trade from 7 a.m. Eastern to 4 p.m. Eastern, that's a long day, but we track that, and you take all 4 of the adaptive entry system signals that present themselves. The average right now for the last 135 trading days is an average of just over $1,000 a month per contract. There have been 25 losing days during the last 135 trading days, and you, during that 7 to 4 period, are averaging just over 28 trades a day. The win-loss ratio is about 73.3%. One of the categories that we track, the 9:30 to noon category, all signals, is averaging $314.81 a day. And we've had 36 losing days in the 135 days that we've been tracking. About a 76.4% win rate. That's pretty solid. And just under 10 trades a day average in that 9:30 to noon category. And then our 7 to 4 trend bias and continuation signals only is averaging $525 a day per contract and losing 29 days out of the 135 trading days, and 73.2% win-loss ratio with an average of about 13 to 14 trades a day. So those are really solid numbers in my opinion. Remember, these are individual contract variables, so if you decided you wanted to trade 7 to 4 trend bias only, you could trade 2 contracts. Well, it's $1,050 a day using this value as our basis. If you wanted to trade 2 contracts of the 9:30 to noon, it's about $630 a day. So You can add contracts as long as you are comfortable with the additional contract margin risk. And it really is just a matter of then being able to do exactly what you've been doing and scale with adding contracts. So that's the summary for today, and I really appreciate you guys paying attention, following along. We're pretty excited about the whole translation of live trading and tracking on a trade by trade basis, even when we have losing days and losing trades. We're pretty excited about tracking all of the detail and being able to present that to you in a daily summary format, showing you what every single day produces in terms of point value at $20 a point on the NASDAQ 100 futures, and then translating that into the personal trading plan, which helps you as a trading business owner understand what your income could potentially be. I think that this tool is one of the most powerful tools traders could take advantage of. And it's because when you have a day where you've had a significant loss, like this 41.85 points, that doesn't feel very good to have a losing day like that. And there's no way around it. It can be emotional. But one of the ways to overcome the emotion is you come to your personal trading plan and you plug in your performance and you look at what your projection is and you realize, oh, okay, yeah, I didn't like the day. I would have preferred not to have, a loss of almost 42 points, but it is part of reality of trading. And even with that, I can see that my overall income for the course of a 12-month period should be pretty solid. And you can scroll back here and look at the number of times we've had winning days and losing days. And still, we have a very, very strong projection going forward. So thank you very much, everybody, and happy holidays to everyone.